All right, so we are live and back on the Financial Fox Smart Investing with Clem Chambers and Zach Mia. Welcome, guys. How are you?
I thought it was going to be on Saturday. I was all geared up for Saturday, but obviously it's not.
That was last Saturday.
Yeah.
We did a special, but I think people like more the week because that's when they concentrated about making money and trying to learn and understand.
And the markets are open.
Yeah, exactly.
Yeah, that helps. Or it doesn't help, maybe.
Anyway, the answer to your question is I'm great. I'm summery. It's the longest day of the year, or was 2 days ago. So, I'm on a diet, so I'm full of vim and vigor and hunger.
Zach, how are you?
Well, I think the stock market is such that you almost don't want to look at it. So that's how good it is at the moment. It's difficult to work out. I suppose you sort of needed to get to a level where the buyers really would come in, whereas at the moment you sort of feel that it's heavy, but nobody, it's just on a level, the same 7,000 level I talked about last time, and I'll keep on talking about forever probably. But it's just one of those things. Everything's right on the Bitcoin's right on the line, like just around 20,000. That was the old high 4 or 5 years ago, and that's become the new support so far. And the FTSE is just the same 7,000 level, which was the high 20 years ago, and it's now 22 years ago, and we're just there. So we're right on the crossroads of all these markets, and you sort of wanted to go one with the other rather than just teasing us as they have been.
So,
well, I think the teasing point that Zach just made is a good one. Although, you see, there are many ways to look at the market, and Zach looks at it in terms of people and support and resistance and people actions and stuff like that. Whereas you can look at it as just a mechanical thing. It's money flow. And, the Fed is pulling money out, trying to, or maybe just trying to clip the wings of inflation. And therefore, they're pulling the money out and putting it back in and pulling out, putting it back in. Because the best way to control inflation is do no harm. Don't print any more money. You don't have to unprint money. You don't have to tighten, really. You can pretend that you're going to and make everybody feel as if inflation might go away. But all you got to do is not print any more money, because then you won't get any more inflation. Yeah, because if the money stays here, inflation goes up until there's no more money to be printed, and then it will go down again because there's no more new money, and it go back to zero because you're not printing any more new money. You don't have to unprint money to get it down. You just have to stop. And that's what I believe they're doing. They're stopping, saying, oh, we're going to raise interest rates and we're going to do tightening. And they won't. They'll just manage the markets to try to remain around here. And they did that after 2000. Bernanke was the first person to do this after 2000. And they kept the market solid, apart from 9/11, pretty much for 6 years, while the market caught up with GDP, or rather GDP caught up with the market. And there was balance again. And that's what they'll do here, in my belief. So there won't be this massive, horrible end of the world crash with a smoking crater. They'll just pin it here, pump money in when it's bad, and pull it out when it's good. Just keep it going around these sort of levels, 7,200 in the UK, 6,800 in the UK maybe, or maybe higher and lower, but in a band going across for 2 or 3 or 4 years.
Okay, so basically, I mean, the big question right now that people are asking themselves is, are we going to see a correction, a recession or a depression? And Clem, I want you to bring up, we have discussed that earlier. You wrote an interesting article, I think it was like 8 or 9 years ago, and people are now, digging the app and say, what do you think is happening right now? So maybe there are something that we can learn from the past.
I've been asked to update by a member of the public who remains anonymous. I mean, I wish they would say, hi, my name's Bilbo, and please update this 9-year-old article. So I'd say, thanks, Bilbo. Oh, that's great. But it was a 9-year-old article, and it was basically about what to do in a recession. So in 2012, Euro crisis was there, and it was pretty gritty. So I wrote an article about what you should do to actually, protect yourself against this. And it boiled down to finding new incomes. Don't give up the day job, which a lot of people have been doing. Control your finances, which means not necessarily become a miser, but look at what you don't need, and hedge your cash by if you think there's inflation, by getting it into assets that might even produce an income. But when I reread this, because I've written 500 articles for Forbes since 10 years ago, I didn't remember a word. But what struck me as the most important thing is right at the end, which is stay positive. Zach, stay positive, because you can't win in hard times if you sit on a rock crying and saying, it's the end of the world. Oh my God, I don't know what we're going to do. We're going to die. You might as well do Butch Cassidy and the Sundance Kid and run out with all guns blazing, if you think you're going to die. But actually you're not, because there's always a party going on somewhere, literally or financially. And you will not get to the party and have a good time financially or just emotionally if you're sat there worrying too much. So my belief is the key thing is to stay positive. And there's always opportunity. And it doesn't matter how old and miserable you get, like me and Zach. There are young people out there having a great time, whooping it up. As you no doubt heard 2 days ago on the longest day of the year, they were out there strutting their funky stuff, jumping up and down, having a great time.
At Glastonbury.
All over the place. Yeah, absolutely. Here in Monaco, in Paris, around, everywhere. And we did too. So positive mental attitude not only is real wealth, as in where it counts in your brain, that is happiness is wealth, right? But also enables you to take advantage of opportunities, and there are always opportunities, or get out of jail. And there's always ways of getting out of jail. So, but you cannot do either. You can't even make money in a boom if you've got a negative attitude. So getting positive, staying positive is actually the key to surviving a recession and a depression. Because I remember, and I'm going to let Zach tell me how wrong I am in a minute. I remember one of my relatives, my aunt, she worked for the post office through the Great Depression. And so did her husband. He worked for the gas board through the whole Great Depression. And while people were marching from Jarrow in their bare feet, there they were stamping paper, tearing out stamps, or sending stuff for gas bills. They wouldn't have known there was a Great Depression going on because they had a job, and they probably weren't that alert to what was going around them today. There were no history books saying that it was a terrible time. They were living in that time. They were young and okay, middle class, lived in a nice semi-detached house to Adolf dropped a bomb on it, and everything was fine for them. They didn't even know that the Great Depression was going on. And so that's the thing to focus on. It can be a hard time, but if you've got a positive mental attitude, you wouldn't even know it was going on. Like I did know it was going on in the 80s, but it didn't touch me at all. As a 19-year-old, I was driving a big BMW with a personalized number plate because I was in the right place at the right time in computer games and had a positive mental attitude. Anyway,
it's almost like having a childlike attitude or a teenager attitude or a young person's attitude. Is that
definitely a young person's attitude? When have we ever been happy? Well, later on for me, but I mean, most people look back at those 8 years and say that's the best years of their life. Well, it wasn't because they were the best years in history. It was because they were young and full of hormones and positive mental attitude and wanting to get jiggy with the opposite sex, or maybe the same sex. And it was fun time. And that's a positive mental attitude. And actually, what's the point of being the richest miser in the graveyard? Or in Monaco, a lot of people where I am, they're so sad and so depressed and so rich. I mean, the miserable misers, there's tons of them. You can see them walking up and down the street. What's the point of that? Yeah, positive mental attitude is the ultimate wealth. So that is definitely where and it's free to focus on it if you can.
So I'm getting some comment about, like, we think that we are actually in a recession rather than obviously a correction. I don't think many people will be up for that. So kind of like a recession timeline, how long that is going to go? Are we looking 1 year, 3 years, 5 years?
Go on, Zach.
Well, I think I would actually refer you firstly to Clem's comment about there's always a party going on somewhere, and I do think there are areas even now which are doing well, and I suppose if you're shorting the market, you're doing really well. I almost think actually just the best thing now is just to keep going short of the market, and if the market, if you lose money on that trade, it doesn't matter because you'll make money on the economy getting stronger. But the difference I think between what we're going through now in the 70s is, in the 70s, you had a much more concentrated economy. So it was basically an industrial one. And if that went wrong, then everything was wrong. But now you've got so many different bits, the service industries, and the way we've got sort of tourism, and we've got so many other aspects to the economy, and technology, of course, as well, that I think that there's probably enough of the economy not in recession to mean that if you can focus on that and invest in that, you will still do very well. And I think that's something to remember, as well as there are a lot of things now which are much cheaper than, the tech stocks. Nasdaq's fallen so much, the tech stocks have fallen so much now that we're heading for the value area, and that's the thing to watch out for. So not be an assault, but and therefore be alert enough to the bits of the economy which offer opportunity, which I think they still do. And I think these days it's even more, the one part of the economy going down actually makes another part of the economy go up, and the other way around. So I'm reminded of the Ocado situation, where Ocado in the pandemic went through the roof, and now it's going the other way. They had to raise £578 million. I'm not quite sure what for, but there are always the.
They don't have to raise it with a gun to their head in a year or two.
Well, because they never make money. But it's nice that we have such an altruistic company which delivers food for people and absorbs the cost.
Well, I think the key thing there, the key call that you made, is that this is the 70s, and I'm a big fan of saying that in the past, because I was awakened in the 70s, but it's not the 70s. The key difference between now and the 70s, and Zach is definitely going to disagree with this, is that government in the 70s was utterly, totally, and completely incompetent, and it's not so now. Not utterly, anyway. Yeah. Remember,
now it is still incompetent, but it knows all the tricks to get money out of people.
Well, they certainly knew them in the 70s, but they were utterly incompetent. You got Nixon, you got Gerald Ford, and you got Jimmy Carter. In the UK, you got Harold Wilson, you've got James Callaghan, and you got Ted Heath. What a bunch of clowns they all were! Absolute total clowns. There was 98% income tax in the 70s. 98% income tax in the 70s. You have to repeat that several times.
People just left. Yeah, but people just left then. Michael Caine left.
Exactly.
So people just left.
Because the government
the Rolling Stones left. People just left. But now there's nowhere to run.
Well, there is. I live there. But
I know, but there's nowhere you can run that easily.
I'm not so sure that's true either. You get on a plane to Dubai tomorrow. But my point is not that. It's that today we have a much more competent bureaucracy, for example. We've got much more competent technicians in central banks, for example.
Yeah, but they use that against us. They use
they might do. Yeah, they might do. But they don't. They won't lose utter control of what the devil's going on like they did in the 70s. And they just completely lost control. Between 1948 and 1972, there was a 200% inflation in certain assets. 200%, sorry, 200 times inflation in certain assets.
I'm happy I wasn't born.
And people don't realise that. But though that period that included the 70s was the end of the cycle, post-war cycle, was the end where the economy broke the chain of impoverishment that came from World War II. And that new cycle started in the 80s. And we've probably started a new cycle again. But the American central banks and the European central banks and the Japanese central banks and the British central bank are able to keep this broken train on the rails, and they'll do so. That process
is it no? But the key question is: are they actually controlling anything? And what would happen if they weren't? And do we, are we just thinking that they're controlling things, but they're not really doing anything at all?
No,
they can make things worse. They can't make things better.
Well, they can make things slower or faster. So you can have a much gentler recession and spread over a longer time than a massive crash that kills everybody in 3 months. And that's what they've been trying to do ever since 2000. Well, actually, ever since 2000. So I think this is 2000 to 2007 again, actually, not 1973 to 1980.
Okay, I'm getting question. Right. So is it safe to invest right now or not?
It's never safe to invest.
But is wise to invest and where?
It's always wise to invest, but it's never safe.
Okay, that's a good point. But wise and where do you invest?
Where do you invest? Well, I mean, go on, Zach. You know me. Once I start talking, I don't stop. What's your opinion?
I think you invest in companies which are non-discretionary spending. So that's, I mean, that covers a very large gamut, but that's what you do.
I think
the discretionary side is going to be totally out over I think over the near term, maybe at least the next 6 months. And it's looking at things that people have to buy, you know, that is the key here. And so obviously I think that, you know, the travel area and all those other areas are going to be, you know, well, just discretionary stuff, you know, clothing. I think we're seeing that with lots of, you know, the ASOS type companies and Boohoo and this and that. I think that's going to fall off. That's going to, you know, be in big trouble. And, you know, just focusing on stuff that, you know, we have to have.
Right. Question is, are we looking to invest, or is wise to invest in capital, income, or equity right now?
Well, if you mean bonds, shares, or in stuff that provides income, and by that, I think bonds are exceptionally dangerous. But I hate bonds. I mean, you know, they've gone up for a decade, done very well for everybody. But you know, I just don't like debt, and I like equities. So equities is the place that I look. But I think that the picture of sideways markets for 3 to 5 years means that what you're doing is you're looking to rotate in and out of positions when they reach a high. So you sell a rise, and then you buy a fall, and you just let the market do that. Another way of looking at it is you just buy good companies that you don't understand why they're so cheap, and you sell companies when they're not so cheap anymore. And you just rotate out of the winners into ones that have seemed to have been losing.
Yeah, but you discussed, I remember you discussing Centrica, you know, with the, you know, and then we've had the gas crisis and everything else. I'm not sure whether that was actually before the gas crisis. You said it was very cheap and it was very, you know, low in the range and everything else. That kind of non-discretionary spending target, that's still the one, isn't it?
I think that's a very good way of looking at it. It's not the way I'm looking at it.
I mean, anything which is basically anything which is a rip-off, you should, you know, don't get mad, get even, you know, buy the shares.
Well, I mean, I'm not so sure that Centrica is a rip-off, but you know, in fact, I'm pretty sure it isn't, because there's a shortage of energy, because the Greens had a good run at it for 10 years, saying how we should all wear sackcloth and you know, eat millet, and here we are. There's not enough energy, and we're going to have to eat millet. And you know, if you don't produce enough energy, you're going to not produce or not have enough energy, and here we are. Because if you're
Greta Thunberg's been very quiet recently, hasn't she?
Who has? Sorry.
Greta Thunberg's been very quiet recently. I presume it's because she's studying hard, because obviously she needs some knowledge to back her crazy ideas.
Well, I have this concept, which is don't feed the trolls. And if you don't feed the trolls, they vanish. And, you know, poor trolls that are, you know, yeah, Joan of Arc, etc. Yeah. Oh, Joan of Arc. Yeah, well, yeah. But don't feed the trolls. And, you know, will this change? Because, you know, ultimately, energy is money, and socialists hate money. So they will attack energy at every turn, because they're attacking money by doing so. And look where we are right now. But the socialists are going to continue to attack energy, because they're going to continue to attack money. Because they used to attack money because money was evil, right? Remember when those days when we were young, money was evil? Yeah. But now nobody believes that anymore. So the only way socialists can attack money is by attacking energy.
It's slightly ironic. It's difficult to find a poor socialist, but it's easy to find a poor capitalist.
Well, sure. Socialism is for the rich. It's a way of controlling the poor.
Yeah, it's kind of okay. Let's go back at some stocks we like. So we mentioned Centrica. Maybe Zach, you start and give us some stocks, some names that you like.
Well, I think there's one stock which I think I talked about before, actually, which has been absolutely pounded of late, which is a graphite producer, Tirupati Graphite. And I suppose the shares floated at the end of what's it, probably December 2020, something like that, at 45p. They went up to 160. Now they're back at 35 pence. And I suppose it's one of those things that, with, if you believe in graphite and you believe in the whole whole sort of the battery EV type thing and everything else like that, maybe that's a stock to look at. But that's really, it's below its IPO price, and I think that is looking at least it should be on the radar as being a potential value situation.
Do they actually make graphite, or are they looking to make graphite?
No, they're actually producing now.
Okay.
And what's the name again?
Tirupati Graphite. So it's TGR is the code.
Wow.
Okay.
Tirupati.
Yeah.
Wow, that's a chart and a half, isn't it?
Yeah,
but
it's a chart and a half.
They don't seem to make much in the way of graphite, though. They've only got 1 million turnover.
Well, that is the story is that they will, they will ramp up production. I think the only problem is actually whether if you're producing, and that's the problem at the moment, you can have companies producing stuff, but whether are there any buyers out there? That's the real question.
I think the major difficulty with all these resource stocks, well, not all of them, but a lot of them, is that so many of them don't actually do what they say that they set out to do. So you get a company that says we're going to do, I don't know, bromine, make bromine from seawater, and they never make it. Or we've got a mine full of whatever, gold, and they never dig the hole. Or we've got this resource of oil, and they haven't. And I mean, knowing the difference is such a difficult thing. Knowing which ones are real and which ones are just racehorses for gamblers to back. That's what that always puts me off these things. So if these guys were worth 30 million and they were making 30 million of graphite, I'll be all over them like a rash. But
but even then, in this market, I mean, there's a company called Open Orphan which does sort of provides laboratory services, so testing drugs and stuff like that. And I think in the last 3 months they've announced £50 million worth of contracts. Market cap's 100 million, and the shares are near the lows. I mean, it's like every other week there's been a contract. The last one was 14 million. It's very strange.
2 times sales, though. You see, 2 times sales. The market is value of some companies at a quarter of sales, not 2 times. 1 time sales is kind of normal. So that's still pretty steep for a company. America, it'll be 10 times sales.
Okay.
And they wouldn't bat an eyelid. In the UK, where if you actually do anything, they look down their nose at you. It's not surprising. I mean, and again, you look at that chart, it went up like a rocket and has now come down like a rock. So I would say you're spot on. But if it halved and got down to 1, which it looks like that's on the chart is going to do, then you'd be in the game. And then you'd have a value stock that's probably making some money. But at 2 times sales, it's expensive.
All right, so the last of the trio, which is one of the intriguing ones, is THG, and that's also near it's been completely slammed by the market.
The hot group. Yeah.
And so, I mean, is that nearing value? Is that nearing its value position at all, or is that still?
Well, I mean, it's a good example of half-time sales. Yeah, it's losing a packet of money on huge sales. The chart looks like is great from my point of view, because it's absolute collapse. I love it when it's collapsed, but it's not making that I'm a dead duck shape yet. So that's so with the 3 examples there, we've got a situation where they're down, but they're not quite in that let's buy it type of situation. I mean, I think the Hut Group, I mean, they have a problem, don't they? A PR problem, i.e., their boss got himself in trouble for saying stuff. And something that I spotted recently, which I think is a very awful thing, is that there's a lot of what's called black PR out there. So if you're a company that does something similar to, let's say, the Hut Group, you hire PR people to go around and attack the management by putting out negative PR about them. So you attack the company buy, short, and distort effectively, not the short part of it. You attack the other company's ability to compete with you by attacking their ability to raise money, by attacking the credibility of the management.
Yes, I know one or two people who do that for a living, actually.
Yeah,
Okay.
I bet you do.
Well, yeah, fine. Let's.
No. That is very interesting in the sense that it's much easier to do the short and distort aided by journalists who are normally, socialist leaning, and they love all that. They love that sort of pride before a fall.
If you forget the short part of it, imagine that I do a cornflake. I'm a cornflake company, and I'm making no money, but I'm making lots of cornflakes. There's another company pops up who also does cornflakes, and they maybe do it better. Maybe they don't do it better, but they compete with me. But I go to a black PR person and say, I'll pay you 20 grand a month to destroy the reputation of that company in that board. So they put out articles saying, oh, Bilbo cornflakes has got arsenic in it. Bilbo cornflakes use child slave labor in Pakistan.
It makes you fat. Makes you fat would be that'd be a killer.
Absolutely, it has trace elements of asbestos in their packaging. Yeah. Oh, the CEO of Bilbo Cornflakes was caught running naked around a field in Wales with a herd of sheep. Yeah. And by doing that, they compete by destroying the company's credibility and access to capital.
But that's
and there's a lot of that going on.
You basically starve them to death, or financially starve them.
But it is about also building narrative. So it's kind of difficult to say, right, if you look at like company battered by bad PR, is this bad PR going to be forever? Maybe it is going to be forever.
Well, it is if you're going to pay for it, because that's what fake news is. Because a company that was something like the Hut Group, there are other companies out there who can compete with them by trashing their ability to raise money in the stock market. Yeah. So if all of a sudden I do whatever they do, and I get a company to destroy their reputation by creating lies about them and constantly creating lies. Well, there's no smoke without fire, Yeah. And all of a sudden their investment bankers won't raise any money for them, and their nomads are asking them what the hell's going on with the CEO in Wales. Yeah, all of a sudden that company's on the way to going out of business, isn't it? And you can see that a lot these days. There's a lot of, obviously you can see it all in the conflict in Ukraine and Russia, how each side is writing what's probably lies about each other. Because somehow that is, fake news is a big, always has been a big thing, but now it's a pestilence. Yeah. And you're seeing it in the stock market, not just the short and distort guys, but the competitors doing it, trying to ruin the reputation of their competitors.
Yeah, I think Boohoo was in that kind of camp as well. Boohoo was a victim of that kind of thing as well.
Well, funny THG and Boohoo. Well, I wonder who's doing it then.
Well, it's not me.
Don't yeah, it's not you. Don't say who, because that would be defamation.
You could put that as the strategy of Lyft. How is going with Lyft, by the way?
As you always ask about public companies, and now in the position as Clem is, or Clem is still in that position, that you can't say anything.
Okay, fine.
You can't promote your own business.
I was not asking for promotion, just
No, but I mean, it's very easy to stray off the purple path of factual information and stuff that counts as promotion. Which, of course, in America, if you're a stock promoter, that's fine. If you're a stock promoter in the UK, that's tantamount to a crime.
Okay, so basically, the kind of like the idea is to look for stocks they have been they've been going through a bad time because of the current market, but they have got revenue, they've got a solid business. Is that what we are talking about? And can we?
Yeah, I mean, I went through all my 40 stocks on the weekend because I'm fed up with getting kicked in the head by the market at the moment. And even though I think this is going to be doing this, it's always good to keep checking up on the stuff. And the only two that I wanted to buy, I wanted to hold them all. The only two I wanted to buy was ITV and M&G.
Yeah.
So M&G, out of 40 stocks that are all great, that I all hold, that are all something I don't want. I've got a list of 2 sales. One is Shell. I haven't sold it. and one is Resolute Mining, because there seems to be a bit of a box of frogs, those guys. And everything else is a whole, apart from two buys, ITV and M&G. And I do not understand how M&G and Legal and General can have 5-6% dividends and 8 or 9 PEs or 5 PEs. I don't understand that. These are solid companies, fabulous dividends, been going forever, and they're basically undervalued by a factor of, at least half. And maybe even if they were at all flashy, M&G would be triple what they are.
Because the investors don't like boring. They don't like boring companies. They like risky companies.
That's why they like crypto.
Yeah. I don't disagree with that explanation, but it's stupid.
And so, how do you factor in stupidity? How do you know M&G or LNG will always have a PE of 7 or 8? Will always be undervalued, and so there's no upside, is there? Apart from the
dividend. I've made a lot of money from Legal and General, a lot of money, because every time there's a correction, they fall out of bed as if they've got some terrible disease and go to nearly nothing, and you buy it, and then as soon as the sirens stop, the blooming thing doubles or triples. So that's how you make money out of these companies. Because the Muppets, who are, I think, often institutional, will dump these really excellent companies and deliver you a 15% yield on something. Legal and General, where are they going then? 15% yield. Oh, I have that. And funnily enough, it goes back up, so they're paying a 6% yield, and you just doubled or tripled your money. So there's a very good ways to make money out of stupidity. And one of them is you just buy the stupid situations, you just let them well, and you let them rotate into becoming less unfashionable, which is contrarian, which is what I am. But it is still nonetheless confusing to imagine that there are billions and billions and billions of capital employed in such a thoughtless way.
Okay, so let's move to crypto, because we have,
what about crypto?
What about crypto? We have got many questions actually. But something quite interesting that maybe I can start with is all about this race to stablecoin. Circle going to the Euro stablecoin, Tether now doing pound stablecoin. What is this race to stablecoin?
Well, I mean, stablecoins give the producers of stablecoin what's called seniorage, i.e., they say, "Hey, do you want a stablecoin? Oh, thank you very much for the dollar." They've got the dollar. And maybe if they sold it at 1.001 of a pound, they get to keep the 0.001 of a pound, and they can take those pounds and stick them in government bonds and earn, whatever, 1 or 2% on that. So if you've got a stable coin like Tether or USDC, which is off the top of my head, 10, 20 billion, 1% on 20 billion, that's not bad income. And all the other things you can do with it. Hopefully they're not doing too much other than that, because you don't want them to not back their stable coin 1-for-1 with real money. But stable coins are very useful because you can do all sorts of things in crypto if that crypto is actually a fiat dollar or fiat pound or fiat euro. And if the central banks can't make programmable money, they can make a central bank digital currency, but they've got one already. So what exactly is that going to be an improvement on? Whereas crypto, these companies, rather than have $50 trillion of cash, which the central banks have out there in the world, they can have $500 billion of stablecoin crypto, fiat-backed crypto, and do all sorts of funky stuff.
So is that because a regulation is coming? That's why all these companies, they are trying to pull out different stable.
Get there first. Yeah, I'm sure there's an element there.
Okay. Anything else on crypto that you wanna bring up?
Well, it's a very interesting situation right now, and my feeling is 20,000 is either the bottom. I don't believe that, but it could be, or it's 10,000, give or take, and we will find out pretty soon. I mean, I think it's going to go sideways. Until I'm going, it's still going sideways, but I still think it's going to go down 10,000. But it's either going to stick around here, and then that's the bottom, or it's going to do another leg down to 10,000. And I think I'm a believer in the 10,000.
That would be it, though. I mean, that would be the end of the sell-off.
Could get down to 7 or 8.
Ooh,
get down to
Zach,
7.8.
you have got a great opportunity to get in for the first time.
With me?
Yeah, you can get
No,
in.
no, no. I was
mean,
in it. I was originally in it about 3,000. So in the 3,000 to 20,000 rally 5 years ago, I was in there. So for that.
Well, that 3,000, which it pulled back to, I think it's 3,500 in the last crash. That was a basis, a bottom. But the real bottom, the long-term bottom, was 7,000 or 8,000. So, you know, what happens in if you look at charts, you go, oh, look at that crash. It got down to 2,000 on the whatever. It didn't get down to 2,000. It got down to 2,000 for 6 minutes. And it actually got down to about 2,300, where it then sideways traded. But that moment when it got down to 2,000 was like 15 minutes. Oh, that was a capitulation moment. It just happened like that. And unless you're sat in front of your computer, and unless your broker is still working, which most of them will have blown up at that point, or won't be able to let you trade because something's gone wrong, you will not be able to trade that bottom. The real bottom is where it actually sits.
So the fact that this is the Bitcoin's hanging around 20 in a very quiet way suggests that it isn't the bottom, because the bottom would be a final fast flush out.
Yeah, it would be when Michael Saylor is going to blow up.
Same with the FTSE, that we'd have, you know, one day when there's some news or this or that, Putin does this or that, and he goes this, you know, it's down 300 points, 400 points, and blinking you missed it, and it's back at 7,000 again, and that would be the low. So the fact that they're so quiet does imply this isn't the low. Lows are normally very volatile.
I think it's a percentage game. So you can definitely say, well, that wasn't a capitulation, although it would have felt like it to a lot of people. It didn't have that crazy low attached to it. Although people might say that 17,800, which happened fast, could feel like one. You could say it wasn't really the amazing carnage that you would expect from a bottom. And I would kind of embrace that. I would say that's a 66 to 33 probability that wasn't that event. So I would agree that wasn't the capitulation that would define a bottom. But there's the other 33% chance. And there's also the unknown unknowns out there, like, you know, Putin, you know, attacks Moldova or something like that, or which could make it fly up, or you know, Biden says we're going to ban Bitcoin's evil, and etc. There's all sorts of things that could affect that aren't in the system. But the things that are in the system, I think, we'll see Bitcoin down to 10, and that would be the capitulation could be 7 or 8. Yeah, or even a bit lower. But the actual moment 3 days later, you would be looking at 7,000, 8,000, and then, you know, then the sideways part would be 8,000 to 12,000 going sideways. So that is kind of what I'm expecting to pan out. I don't think it's 20,000. You know, it will always takes a lot longer to break down than I expect. So maybe we might sit around here for a couple of months.
Okay. So yeah, so basically just waiting for the big headline.
Yeah, one of the ways to do it is to go, well, when's he going to go to the moon again?
Well, in 5 years, not 5 years, sorry, 2024. That's when.
Okay, so give yourself a little bit of leeway, say 2024, 5, and you say, well, how much am I going to put into Bitcoin between then and now? If I knew it was a bottom, how much would I put in? Well, you say, I'd put in, modest 20 grand, right? Well, that's 36 months or 30 months, right? So put 1,000 a month in. Doesn't matter what the price is. Put 1,000 a month in, just every month, and then you'll get an average pretty close to the bottom. And then it'll explode, and when it's at $150,000 a Bitcoin, I'm not saying it will be, you'll be going, oh, well, I averaged in at 13,000. Everyone will go, I don't believe you. And you'll have done well. So you can stress about, oh, I'm going to put a limit order in at 7,500, and I'm blah, 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 blah. Or you can just go, buy 1,000 this month. And then next month buy another 1,000. And then next month. And if it never moves, you're going to end up with a big chunk of Bitcoin for, you know, maybe the next big run up. It's what I do with gold, by the way. I just buy, you know, buy an ounce or two every time I get an itch.
Okay. Zach, do you have any kind of, I don't know, alarm or something that's the time where you're going to go back, you are going to buy some crypto?
I think I probably just buy stocks which are related to crypto. I think I've had enough of these.
So you
enough of all that.
you will be basically buy Argo blockchain when basically Clem said or envisage is going to be the end of the bear market, and we're going to have
I mean, I think you've got it. So I don't know, I can't remember what Argo is now, but it's I don't know, it's 40p or 35p, something
or
like that.
online blockchain, or there are many.
Yeah, one of those. I think it's just less hairy, and you can sort of hopefully look at the management and the company and the RNSs, and you've got something to look at. Not that necessarily helps, but you would do it like that. I think that's a rather more relaxing way of doing it.
I bought Argo. I think I bought it at 3p before it went to £3, but I did sell it at 20p.
Yeah, I remember you said that, Clem. Well, but it's still a good. It's like it's like
it's gonna happen. It's gonna happen all the time, and I really don't care about these things. It's 35p Argo, and at the bottom of the market, who knows where it will be? But the thing is about equities is there's a 3% spread on Argo. 3%. That means the market will rip you for 3% just to buy in and to sell. Whereas with Bitcoin, it's an uppers. And on a Sunday night, I could get out at 3 a.m. in the morning. And the 24/7-ness of crypto is really, really great. I mean, really, the crypto market is just the stock market these days. And it's a good old-fashioned stock market. Goes back to really the stock market of the times of the 18th century, where there were no rules and it was all mad, and you could make a fortune or lose a shirt. It's a very, very high risk game. The only reason to play in crypto is because and I don't mean because someone's told you. I mean because in your very bones that something's going to happen. If you're not absolutely sure, don't touch it with a 10-foot barge pole. The golden rule amongst gold miners, gold panners in particular, is if you think it's gold, it isn't. If you know it's gold, it is. And that doesn't make any sense until you actually find a bit of gold in the river. And you're going, is that gold? Oh, I think it's, no, it's not. Oh, I've got a bit of gold here. Oh, no, it's pyrite. And then suddenly when you get a little nugget, however tiny it is, you go, that's gold. And that feeling, when you know it's for real, like Coca-Cola, that's when you can do it. If you feel, if you have to ask, you shouldn't go near it.
It's a bit like with people.
Yeah, I think that's right. No, I think that's absolutely right, Zach. The older you get and the more bitter and twisted you become, the more you realize that, there's a few diamonds out there that you should associate with, and the rest of the people are just noise and quite often toxic noise.
Yeah, exactly. And it's better to...
We'd be miserable together, Zach.
I think that's a very good plan.
No. We are not going to be miserable. We said many times about opportunity. And
stay positive.
Yeah, exactly. That is the main things out from today. It was 9 years ago when Clem wrote the article, and it's the same now. Stay positive. Big opportunity are coming.
I can tell you, I read a site which will remain nameless. And ever since 2007, they've been saying it's going to be the end of the world and the market's going to crash. And everybody respects them for being, really clever and smart. And they reckon they're the smartest people on the block. And they've been solidly wrong for 13 years. The market's been gone nothing but up. And if you believe what they said and what they've told you with utter conviction, you would not have made a fortune. And all you had to do was buy everything up until about a few months ago, and you would have made a fortune. And quite a few people have. But if you read that stuff and we're down, it's all going to end, the Federal Reserve doesn't know what it's doing, buy gold and guns, you'd be sat there with a pile of gold and a pile of guns and not much else. As opposed
it's a bit like that guy. It's like that guy Albert Edwards, who's been a permanent bear from Soc Gen, I think is one of those pundits. And then the other guy, the Black Swan guy, who's always negative as well. He got lucky once, and he's lived off that for the last 14 years or whatever it is.
You'd love Taleb. He's very like you. He's
well, apart from being wrong.
No, he's a contrarian, and he's basically of a sort of, you know, he's always angry and against things, and you know, but he's an option king. He's a man that does wild options on tail risk, but he's, you know, his work's good on randomness. But as you say, you see, I've been a perma bear for a couple of years. I'm now a bull. I've gone bullish. And the trick is to be bearish when it's going down and bullish when it's not going to go down. All you've got to do, and I tell this story over and over again, it's incredibly important. When I was a little child, I was about, I think, 11. My father had made an absolute big boy fortune, big yacht fortune in commodities. And I said to him, Dad, how did you make this huge fortune in commodities? He was driving down the road in his car. And he said to me, son, it's really easy. All you've got to know is which way the market's going. If it's going to go up, you buy. And if it's going to go down, you sell or you go short. That's all you've got to know, which way the market's going. And as an 11-year-old, I thought, that's what a load of rubbish that is. How can that be right? That's too easy. Can't be that easy. So anyway, about 30 years later, I went, bloody hell, the old man was right. All you got to know which way the market's going. If you don't know, you shouldn't be playing. And if you're long and you think it's going to go down, you shouldn't be in. And if you're short and it's going up, you shouldn't be in. So what you're doing in the market if you don't know which way it's going? All you have to know is which way it's going. And it can't go up all the time. And it can't go down all the time. So you've got to be bullish sometimes and bearish other times.
But the word in there with the key word is you've got to know. Know is the word.
Exactly.
If you don't know, you're thinking about it, or you have a doubt, etc., then you should be trading.
You should play. Exactly.
You only trade when you know. Only trade when you know, which is that is actually the right. That's, and it's almost like it's a bit like in cricket that you wait for the ball to come onto the bat, not try and sort of chase it on, you know, a meter away, or, you know, stick the bat here and there and everywhere. You just let the ball come to the bat.
I totally agree. So you can know near enough if you focus on knowing which way the market's going, rather than all the narrative and all the news and noise. Because all that does is it gets rid of the noise, right? If you get rid of noise and you realize noise is what it is, and all you want is signal, if you focus on which way the market's going and nothing but that, on which market is going which direction, nothing but that, you're in good shape. Most people, absolutely, that's the last thing on their minds.
Yeah. Okay. Well, that's a fantastic note to finish today's show. So, just learn, research, try to understand where the market is going.
Which way is the market going? That's your only question. If you don't know, you shouldn't play. And if you think it's going that way, you don't know. And if you know, if you just go, it's going that way, you're in a good shape. Oh, it's going to go that way, you're in good shape. If you really, really, really know, because you've done lots and lots of work on the signal of what's really going on, to know which way the market's going, and then you're in great shape.
Okay, thank you so much, Clem. Thank you, Zach, and thank you everybody for watching. If you have got any question, just drop them in the comment section, and I will see you next week.